What is up, everyone? I'm Money Boss and welcome back to my channel. This video is all about Fidelity index funds. I'm going to talk about which of Fidelity's index funds are the best ones to invest in, and I'm also going to show you how and where to buy them. Index funds are a great way to get started investing safely without doing hours and hours of research on individual stocks. They're the best way to create a diversified investment portfolio that grows your money big time over the long run. And Fidelity is known for being one of the most reputable low-cost index fund providers. I also happen to be a longtime user of Fidelity, so not only do I know the platform inside out, but I'll also take you on a tour of my account so you can see what index fund investing at Fidelity really looks like. Before we get started, have you subscribed to my YouTube channel? If not, what are you waiting for? My channel is all about investing for beginners, and you're going to learn a ton about being smart with your money, so make sure to subscribe and hit the notification. Well, for new videos like this every week, so let's get right into it. First, I'm going to talk about the most important criteria to look for before investing in Fidelity index funds, and then I'm going to give you a list of the best Fidelity index funds that meet this criteria. And finally, I'm going to talk about how to buy them, including how much to buy and in what combination. First off, I don't want to assume anything, so allow me to explain what an index fund is before I get into all the other stuff. An index fund is a pooled investment vehicle that gives you an instant slice of ownership in hundreds of different companies in one easy purchase. The reason why it's called an index fund is because the stocks in the fund are chosen by an index rather than by some super smart overpaid money manager. Indexes you might have heard of are the S&P 500, the Nasdaq, and the Dow Jones. So an S&P 500 index fund will have 500 stocks that are in the S&P 500 index, and the Dow Jones index fund will have the 30 stocks that are in the Dow Jones index. Okay, now with that out of the way, let's talk about what criteria to look for when looking for Fidelity index funds and index funds in general. There's a couple of things you want to look at when buying any index fund, and the first thing is the expense ratio. The expense ratio is how much money is being skimmed off the top from your investment every year. In other words, it's an annual fee for investing in the fund. If you want to avoid paying this fee, your only other alternative would be to go out and buy every single stock. Go fund yourself, and that's obviously not feasible, so I certainly don't mind paying a fee to the index fund to do all that work for me. That being said, I want to keep this fee as low as possible. What can I say? I'm cheap. A good rule of thumb is to look for an expense ratio of under 0.2%. For example, let's look at the Fidelity Total Market Index Fund or FSKAX. If you invested $1,000 in this fund, you would pay an annual fee of only 15 cents peanuts. However, if you invested in this fund, the Fidelity Women's Leadership Fund, your annual fee would be 1.12% or $11.20 a year. Doesn't sound like a huge difference, but compounded over time, a small difference in the expense ratio adds up to hundreds of thousands of dollars. Don't believe me? Check this out. This chart shows you the difference that fees make in your investments. A difference of 1% in annual fees reduces your nest egg over time by a total of $42,000. At the end of 30 years, crazy. So when you're looking to invest in an index fund, the expense ratio is the number one criteria. To find the fund's expense ratio, just pull up the fund's summary page and look for the section that says gross expense ratio. Again, you're looking for funds with an expense ratio of 0.2% or less. The second criteria to look for is automatic reinvestment of your dividends. Let me explain. When you invest in the stock market, you get dividends monthly or quarterly, and every time you get a dividend deposit, you don't want that cash to just sit there. You want to use that cash to buy more stocks. That way you can make money on your money. Your dividends buy you more stocks, which in turn pays you more dividends, which you use to buy more stocks, and so on and so forth. That's called compound interest, and oh my god, it's like the best thing ever. This chart shows you the difference between reinvesting your dividends and not reinvesting your dividends. If you invested $100,000 to start, and then you reinvested your dividends like I told you to do, you'd have over $152,000 today, but if you didn't reinvest your dividends, you'd only have $81,000. Moral of the story? Reinvest your dividends, and the way to do that is by investing in Fidelity index funds that are mutual funds, not ETFs. Index funds come in two forms: mutual funds and ETFs. For example, you can invest in an S&P 500 mutual fund or an S&P 500 ETFs. They're both index funds, and the end result is that you'll own a slice of the S&P 500 index with either one, but the only difference is that the S&P 500 mutual fund index fund does automatic dividend reinvestment for you, whereas the ETF doesn't. You don't get dividend reinvestment with ETFs. So the second criteria to look for when buying index funds is to make sure that it's a mutual fund, not an ETF. Okay, now for the third criteria, transaction fees. Transaction fees are whatever the fund charges you to buy into the fund and also to sell out of the fund. Some funds charge you for both. Other funds don't charge you for either. And it all depends. Obviously, we're gonna go for the funds that don't charge you anything, right? We're looking for free 99. The good news is, if you have an account at Fidelity, you're not going to pay any transaction fees to buy any of their mutual funds. But if you have an account at Vanguard, for example, they'll probably charge you, say, like $50 or something crazy if you want to buy a Fidelity fund. So again, transaction fees aren't a concern for you if you're buying in-house. In other words, you have a Fidelity account and you're buying Fidelity funds, but outside of that, you'll probably deal with some hefty transaction fees. Okay, and now for the best Fidelity index funds. First of all, these are all mutual funds, so no ETF on this list. And second of all, this list of funds is not an explicit recommendation to buy. It's just a resource to help you jumpstart your research. So with that disclaimer out of the way, here we go for domestic stock. The Fidelity Total Market Index Fund has an expense ratio of 0.015%. And for international stocks, the Fidelity International Index Fund or FSPSX is a good way to go. For emerging market stocks, you can check out the Fidelity Emerging Markets Index Fund or FCPADX, which has an expense ratio of just 0.075%. For U.S. government bonds, the Fidelity Intermediate Treasury Bond Index Fund has an expense ratio of 0.03%, and for inflation-protected bonds, the Fidelity Inflation Protected Bond Index Fund or FIPDX is a good one to look at as well. And for real estate, the Fidelity Real Estate Index Fund has an expense ratio of 0.07%. As you can see, Fidelity is not that creative with their index fund names. It's pretty straightforward. To make it easier for you, I made a handy PDF download for you with a list of all of these funds, the ticker symbols, and expense ratios. So grab it below. I think you'll find it super useful for. The link is right below this video in the description, and now let's talk about how to buy these funds. Once you decide which funds you want to buy, the rest is super easy. You just type in the ticker symbol in the search bar, pull up the fund summary page, and then click buy. But in the little trade window that pops up, you'll see that you need to specify a dollar amount. All of the funds I mentioned here don't have any investment minimums, so you can literally buy $1 if that's all you have. But assuming you have more than $1 to invest, the question you need to ask yourself now is how much to buy of each. And in other words, what asset allocation you want. Asset allocation is the particular mix of investments that you have in your portfolio. And it's the number one decision you need to make before you pull the trigger on any of these Fidelity index funds. For example, if you have $10,000 of investments and $5,000 is in stock funds and the other $5,000 is in bond funds, then your asset allocation is 50% stocks, 50% funds. Generally, the longer your time horizon, the more you want to have stocks. It's also a good idea to mix in other asset classes like real estate, in order to make your portfolio as bulletproof as possible throughout any economic conditions. The most basic asset allocation is doing a split between stocks and bonds. Jack Bogle, the founder of Vanguard and also considered to be the OG of index funds, he recommends subtracting your age from 100 and owning that much in stocks. So if you're 30 years old, you'd own 70% in stocks and 30% in bonds. For example, if you're investing $10,000 with Fidelity, you could buy $7,000 worth of the Fidelity Total Market, the Total Market Index Fund, and $3,000 of their Bond Market Index Fund. And that would give you a 7,030 stock bond allocation. Here's a slightly fancier asset allocation recommended by David Swensen, who's the legendary manager of Yale's endowment fund. David Swensen helped Yale grow its endowment fund from $2 billion to $27 billion. So to me, whatever he recommends is gold. So Swensen recommends the following asset allocation: 30% in domestic equity, 15% in international equity, 10% in emerging markets equity, 15% in U.S. Treasury bonds and 15% in inflation-protected U.S. Treasury bonds and 15% in real estate. So if you have $10,000 to invest, then you're using Fidelity Index funds. Your portfolio would have 6 different funds in it and look something like this. Again, you can refer to my free PDF download, which I've linked to below, and it has all the info in there with pie charts that explain these recommended asset allocations, as well as the list of Fidelity Index funds you can use. So there you have it. Now you know what criteria to look for when investing in Fidelity Index funds. You also have a list of the best Fidelity Index funds that meet this criteria, and you also know how to buy them and how much to buy of each. Investing doesn't have to be hard or complicated. Index funds are the best way for a beginner to start. If you're sitting on some cash and you want to start putting your money to work, I highly recommend choosing one of these asset allocations and getting started ASAP with Fidelity Index funds. The key here is to start now. Perfect later, because every day you wait is another day when your hard-earned money isn't working for you. Did you like this video? If so, then please give it a thumbs up, and if you have any questions all about what I talked about, feel free to ask me in the comments or message me on Instagram at investingwithmoneyboss to learn more about money and investing. Make sure you also check out these 2 videos right here, and if you're new to the channel, I'd really love it if you subscribed. Always remember to go after your dreams unapologetically and to live life on your terms. Cheers!